Hey guys, hope you and the families are doing well. 6 stocks in the US market that I think are displaying a lot of leadership is what I'm going to take you through in this video. Now we're going to look at these stocks from a technical perspective because they're showing a positive divergence versus the major indexes. So these stocks are starting to rally while the major indexes continue to trend down. So we're seeing a big improvement in relative strength. We're also going to analyze the fundamentals. These 6 stocks, I think the fundamentals look pretty solid, and I also think they'll be less affected by the consequences of tariffs. So I'm going to take you through them on the market surge charts. Now they are today's video sponsor. They're running a once a year free event where you don't need a credit card to sign up. So you can access market surge for free until the 23rd of March 2025. So if you're interested in using market surge, as you're going to see me do in this video, you'll find a link to that for free in the description and the comment section below. So let's get straight into the 6 stocks. So the first one up is Spotify. Now for me, Spotify, I think, is very, very interesting here. You can see it is rallying strongly here. And if you were to know what the major indexes are doing, they currently look like the opposite. Okay, the major indexes are just kind of like floundering, flagging out, maybe like a little bear flag down here, not looking too strong. Whereas Spotify, what we can see is a huge turn up in the relative strength line as well. See this? I really like looking for when relative strength starts to come through. And what I quite like here from a technical perspective, before we go into the fundamentals, is a potential cup and handle pattern forming. Okay, so look at this, moving down here. So it sells off with the indexes, but now starting to recover. And look at this little handle that's potentially forming here as the handle builds underneath potentially a nice psychological number of $600 as well. So you've got the 10, the 21 and the 50-day moving averages all in there. So I'm just looking for this to maybe continue to tighten up or starting to break through. And Spotify, from a trade management perspective, what I quite like is it can go on some decent runs along these key daily moving averages. If we then turn our attention to some of the fundamentals, this will be a common theme that you see. What I'm looking for are a couple of key things. What I like to see is the earnings, the sales and the after-tax margins accelerating. So you can see the earnings year over year up 559% reported on a quarterly basis, sales up 8%, after-tax margins accelerating as well. You see this, how it goes from 5% to 7% to 7%, and then you can see here up to 8.7%. What I really like doing is looking up here. Okay, so not only am I looking for the earnings and the sales acceleration, the improvement in the after-tax margins, I'm looking at the annual earnings per share. So that's the EPS here. Okay, I'm looking for it to be in all-time high territory over the last 8 years, and ideally the forward guidance is going into all-time high territory and has been raised. So if we take a look here, for many years Spotify is losing money. Okay, it loses $3 a share, $1 a share, $3, 20 cents a share, $2 a share, $3 a share. Then in 2024 the company becomes profitable, and that's when it also starts to show a lot of leadership as well. Okay, so you see this here, $5.69 a share. Then the 2025 estimate is up 93% with forward guidance having been raised. See that? Look at this green arrow. That means forward guidance has been raised up to $10.98 a share. And then next year, 2026, expected to earn $14.20 a share, so up 29%, plus the forward guidance has been raised. So when I look around at things, especially this EPS, the annual EPS estimate, is the forward guidance being raised? Am I seeing a lot of relative strength? Yes, I am. So Spotify is one I'm paying very, very close attention to. Let me take you on to the next one. You'll probably be familiar with it. It's Palantir, so PLTR. So again, very similar to Spotify. What I'm looking at here is this improvement in the relative strength line. Okay, now the major indexes are down here below this black line, which is their 200-day simple period moving average, whereas PLTR is actually holding up way above that. Okay, so it's showing some relative strength in that regard, positive earnings reaction for the last 2 reactions. And then what I'm looking at here is a potential low pivot to be built around a clustering of the 10-day EMA, the 21-day EMA, and the 50-day simple period moving average. So you see how this is just starting to tighten up in here, and I'm looking then for a breakout like this. Now, if we were to look from a fundamental perspective, let's go for the earnings per share first here. Do you see how you're getting this sequential growth year over year, and the EPS estimates for 2025, 2026 are in all-time high territory for this stock. Losing money, 8 cents a share, 13 cents a share, 6 cents a share, 25 cents, 41 cents, and then here we go, 54 cents, 68 cents. If we take a look at the earnings year over year, up 75%, sales up 36%, acceleration in the after-tax margins from low 30% up to 41%. This company here looks pretty solid to me in terms of Palantir, in terms of Spotify as well, potentially less influenced, less impacted by tariffs as well. Let's go on to the next one. okay, which you all probably know about as well, which is Netflix. So Netflix to me is displaying a lot of relative strength. See this improvement in the RS line. Now the black line here is a 200-day SMA. So as you know, the major indexes are kind of down here, somewhere around there, 200-day. But Netflix, nope, just hanging up here, doing very well. So if we take a look here, potential cup and handle building underneath maybe the very round psychological number of $1,000. I would actually quite like Netflix to split 10 for 1. I think that'll bring a lot more liquidity to the stock and maybe make it more of kind of like a day trader stock as well. And then day traders not really going to be trading like a $950 stock. So I think actually a stock split could work out quite well for Netflix. But then if we take a look here, most recent earnings reaction, we see a gap up. We see that on the prior one as well. Earnings up 102% year over year, sales up 16% year over year. Margins could be a little bit better in terms of the acceleration there. What I really like here, okay, look at the EPS estimates. Institutions lap this up. They absolutely love this, okay? $2, $4, $6, $11, $9. Then here we go. $12, $19, $24 a share, $30 a share. Forward guidance being raised as well. For a company of this size, 406 billion, pretty repeatable in terms of its earnings, in terms of its revenue as well. I actually think Netflix has improved in recent years. I think things like the Tour de France Unchained, I think Full Swing being the golf one, I think Drive to Survive, I think those kind of programs are absolutely brilliant, bring a much wider audience to Netflix as well. I think they're really well done. So yeah, Netflix one I'm watching, very similar to like a PLTR, like a Spotify, starting to see a lot of cup and handles develop. So this is interesting, okay, watching for these cup and handles. A relatively new IPO that I'm watching is DoorDash. Okay, so if we load this up here, remember the major indexes are down here near this black line, the 200-day SMA. We can also see this improvement in the relative strength line. Okay, so you can see how potentially we get this cup and handle. It's a little bit wedgy uppy right now. You see that? It's a little bit kind of like wedgy uppy. So what I would quite like to see is maybe like a handle form underneath 200. Okay, again, nice round number there. So maybe something like this, okay, where we get this cup, handle form, something like that. But it's displaying a lot of leadership. Earnings up 185% year over year. Sales up 25%. EPS estimates into all-time high territory. This year up 670%. Forward guidance being raised. Company goes from losing money to then profitability. Okay, that's something that I like looking for. Another one that you probably heard of is Uber. So with Tesla doing whatever Tesla is currently doing, I think one of the beneficiaries there is Uber. Now I'm looking at Uber here thinking, wow, this is a pretty big base that the stock is building with some nice shakeouts going on as well. Those of you who are trained in the Wyckoff methodology may recognize these as some nice shakeouts, some spring type action going on. Now Uber has a positive earnings reaction. The volume is drying up quite constructively in here. Earnings up 386% year over year. Sales up 20% year over year. Acceleration in the after-tax margins as well. And the annual EPS for next year going up near all-time high territory. Last year was all-time high territory at $4.56. So a little bit bugbear there that I'd rather see the annual EPS going into all-time high territory. But I'm thinking big base here, starting to see some relative strength coming through. And look at this clustering of key daily moving averages. 10-day, 21-day, 50-day, 200-day, all there, nice big base. Uber is one that I'm watching very closely. I think that could be quite a big winner in years to come. RBRK, relatively new IPO this one. Cybersecurity related. So you can see it builds this kind of first IPO base here. And this has got like a double bottom look to it, okay? Actually pops back up here on the earnings. Really positive earnings reaction. See the volume popping up. So this is the final one of the 6. Little bugbear here from a fundamental perspective. Company is not yet profitable. I prefer companies to be profitable. There is some decent earnings growth, some sales growth coming through. You can see that last quarter or on a quarterly basis last year reported 175 million, now going up to 258.1 million. And I'm looking at this here. There's been 2 earnings gap up. So you can see the gap here and then the gap here that I was pointing to. This is kind of resembling to me like a double bottom type pattern where you get kind of like a W form. And those of you schooled in the Wyckoff methodology may recognize that as like a phase C spring type event. And then you get this really strong rally coming back up here. So for me, what I'd like to see is it just kind of tighten up a little bit more. And then in the second half of this base, similar to the other ones, what you could start to see is a cup and handle pattern develop. So something like that is what I'm watching for. Maybe a little kind of shakeout around the 21-day EMA as well. But you got the 10, the 21, the 50 is all there. Relatively new IPO. Looks like a fairly strong stock to me. Really like the prior to earnings reactions with the pop in the volume as well. So those there, guys, they are some of the stocks that I'm watching. I think they are kind of can slim, potential for true market leaders, especially like an RBRK. Certainly if it eventually reaches profitability. But they're showing a lot of relative strength, potentially less influence or less impacted by tariffs. If there's any stocks that you guys are looking at that you think are really strong, please do just let me know down in the comment section. I'd be very interested to look at those stocks. Thank you very much for watching, and as always, I look forward to seeing you in a future video.